Hey guys, what's going on, 10x investors? It's your friend Danny Deals here with Un Poco Mas, the show where we try to give you just a little bit more. Feeling a little bit of a head cold today, so the voice is off, but wanted to bring you guys a quick update on 10x. We are starting to see a little bit of positive movement in the stock the last couple of days. If you take a look at the chart, I'm going to give you a couple of levels that I think you want to watch out for, and then I'm going to explain why 10x is actually in a far better position. If you're a new investor, it's a far better time to invest right now than it was, say, middle of last year when Zacks did the piece where they basically gave a sort of a valuation, a quick and dirty valuation on 10x. So I just want to run you through like a little bit of information. So this is November 3rd, 2022, and this is by John Vandermosten. You have to really keep your eye on things on the internet. Like if you see an article from Motley Fool, for instance, they have some articles that are written by like 20-year-old kids that really don't know what they're talking about. People like myself, not the 20-year-old part, but that not know. And then they also have articles that are written by seasoned investment professionals that are really, well sourced and researched. So just keep this guy in mind because I want to tell you who he is after I give you some of the information. So last November, they're in this strategic review process, um, and he's basically talking about what is the potential for the levosimendan drug, and he's saying, assuming a modest 5% penetration at $1,000 per month, it would generate over $1 billion in annual sales. Given there is no other treatment for group 2 PAH, penetration and price could reasonably go higher. So, very conservatively estimating that over $1 billion per year in sales. Um, the barriers to 10x raising capital or getting a partnership or getting a buyout were the heavy claims on equity. As reported in Q2 2022 10Q, there were 25 million shares, 20 million pre-funded warrants, 33 million warrants and options with exercise price averaging under $1. Um, blah blah blah. And it just keeps going on. In other words, like the capital structure was a mess. They had financed at bad terms over the years. This was not done by the current management. This was done by the previous sort of original management that often has horrible fiscal habits. They might be a founder or someone who's been there a long time, and while they might be skilled in biotechnology or medicine, maybe they are not skilled in business, and that is why founders and sort of long time CEOs often hang on far too long, and they end up as an anchor on their company, and they destroy their company's fiscal health. In any case, with 10x, they run a bunch of scenarios. They try to account for all the warrants and all the options, and basically, they're talking about the fact that at the end of the day, after they make all these calculations, based on the data released so far, there is a compelling argument for value for 10x assets, which we conservatively calculate to be approximately $325 million after applying an onerous 40% probability of success to our NPV value of the levosimendan and imitinib programs. Um, Okay, so he's talking about the potential buyers. Obviously, none of that came to fruition thus far, but we could see some partnerships. Um, anyway, they go through Johnson& Johnson, Bayer, United Therapeutics, Merck, Gilead, GSK, Johnson. They have a lot of products where these would be complementary and round out their portfolios. But I just want to point out that the overhang they're talking about is largely gone at this point. Like all those warrants are gone. If you read the latest 10Q from Q1 2023, there's only like 4 million warrants left, and 1 million of those are, old ones that are probably never going to get exercised or aren't worth very much. So Now you can actually make a clean deal with 10x. 10x, not only a lot of the warrants are gone, the options are gone, because when you go through that reverse split money raise process, that ends up shaking out a lot of that garbage financing. They have to deal with it. They have to exercise the warrants. They have to make some kind of ratio. They have to make a deal with management, or there may be provisions included with those original warrants that say how they're handled in terms of capital raises, in terms of exercise with reverse splits, all these things. It's just basic math. So if you read the latest, if you read what he's talking about in this article with all this overhang from warrants and stuff, and then you read the latest 10Q, all that stuff's gone. I mean, now you have a company with almost no debt, plenty of cash, two really good phase three ready drugs, and you don't have all this nonsense in terms of the difficulties that any type of buyer or partner would have because they have so many of these crappy warrants and options hanging out there. So now, again, John Vandermosten, CFA, this is Monday, May 22nd, 2023. And they basically go over an update on 10x, the highlights, the reverse stock split, the 15.6 million public offering. This is really critical. The patent issued March 2023. They talk about the value of the patents. Prioritization of TNX 103. Of course, we know that. Produce no revenues. We know that. Expenses are way down. We know that. R&D expenses down 77%. Net loss was 1.4 versus 2.7. The end of Q1, cash and cash equivalents totaled 14 million. So obviously, that was due to the capital raise. Again, we all know all this stuff already. But the update, there's been rough waters, the capital raise, patent granted notice, and reverse stock split. So I just want to point out that if you compare where they were in November, um, and where they are now, if the assets were worth 325 million, then they still would be, and all of the overhang and problems that they described are actually gone now. And it stinks if you were a shareholder back then, because we got basically wiped out, and our shares that I'd owned for some time, I didn't own that many, but the shares that I owned from way back, my OG shares, are basically worthless. So I bought a lot of new shares down at like 32 cents, 30 cents, and that's what you have to do when you get absolutely wiped out by these reverse split capital raise type of death spirals. If you think you have a good company on your hands, then the move is to go ahead and average down when these short long hedge funds create these massive dips, because they're unsustainable. They can't buy shares for a minimum of 72 cents, dump them at 30 cents, and make money. I don't care how smart they are, that math just don't work. That dog just don't hunt. But in any case, just because there's so much noise on the internet and so many people who have no idea what they're talking about and have no qualifications and are tired and haven't had enough coffee, then there are a few people who actually work for companies like Zacks, and they're legit. And John Vandermosten, it actually turns out, I took a look at a couple of sources on him, and this is just his bio, but he's telling you the assets are worth 325 million. Okay, and you're like, well, who's this guy? Why does he know what he's talking about? He's probably just some idiot. He's probably a 22-year-old fresh out of college who's never done business in his life. And okay, that's just simply not true. So we have assets that are worth 325 million extremely conservatively, and we have a market cap right now of $7 million, and we have cash on hand of $14 million. So just to give you a brief note on this guy's bio, um, he's a senior analyst at Zacks Investment Research, covers small cap, 19 years experience in investment management research roles across all ranges and capital structures. He's a frequent moderator of life science industry panels, and his research articles have been posted extensively on Yahoo, blah, blah, blah. John was a research analyst for Singular Research, covering the healthcare space and a consultant with Coker Group. I know some of these companies, I don't know all of them, but he handled the IT, hospitals. At Coker Group, he consulted with clients in a variety of strategic and financial areas, including asset valuations, due diligence, and transactions. Prior to his role as a sell side analyst and consultant, John was a portfolio manager at Westwood Holdings Group, and he covered healthcare and other spaces as a research analyst. John also worked as at the Teacher Retirement System of Texas as investment analyst on the agency's large cap call overriding fund. John has an MBA from Texas A&M University and a master's degree from Tulane University and a BA from San Diego State University. He also earned the Chartered Financial Analyst designation and is a member of the CFA Society of Dallas. Um, and he covers biopharma, infectious disease, med tech, and oncology. So, I mean, I'm just telling you, a lot of us can talk like we know what we're talking about, and I certainly don't. I'm a simple guy. I just look at what do I think this thing's worth. Certain market forces, for their own purposes, have made it worth a tiny fraction of its true value. And that's when I try to buy these penny stocks. Like, it's not that complicated. I say, okay, this guy who knows exactly what he's talking about is telling me very, very conservatively this company's assets are worth 325 million. And they have no debt, and all of the crap that was dragging it down, the warrants and the options, all that's largely gone. There's only like 4 million warrants left. Read the 10Q from Q1 2023. It's all in there. I mean, I'm not making this stuff up. And then you combine that with the fact that the shorts, let me zoom back out. The short interest is almost completely gone. Just in the last couple of weeks, the short has completely disappeared. So, um, 7 days ago to now, the shares on loan have gone down 99% from 180,000 to 1,000. Utilization has gone from 16% to 0.21%. So maybe the shares are updating and this data is off, but basically the short has completely disappeared. So you have to ask yourself, why would that happen? Well, I mean, the same company that is shorting the stock is long the stock and owns a ton of shares. They actually call themselves a short long hedge fund. So they're driving the price down, shorting it, convincing other retail investors, dumb weekend investors, to dump down at 32 cents, 30 cents. They've held the stock down here at considerable expense for some time, and they've certainly dumped a lot of shares to me down in the low 30s. But anyway, this stock has to go up for their strategy to make any sense, and it has to go up based on the fundamentals. I mean, how can you have assets that are very conservatively worth 300 plus $1 million and are going to do really strong sales, and FDA is giving every indication they want to approve, and then the company doesn't have any debt, the overhang that was problematic is largely resolved, and then the company is just valued less and less and less. This market cap is under $10 million, way under $10 million, and you have two phase three ready drugs, one of which is going to sell a lot. I mean, again, this analysis lays out very clearly why just levosimendan, if it only assumes gets 5% penetration to this type of PAH, they'll sell over $1 billion a year. I mean, think about it. And we have a $7 million market cap. You guys, I just have to tell you, this thing has been a setup, I believe, from way long ago when the hedge fund got its tentacles into, its claws into this company, started controlling the stock, controls so much of the float. What they're going to do is they're going to choke the float. What I call it, they're just going to take shares off the market. Anyone else who's short the stock is going to be hung out to dry. They're not going to have anything with which to cover. They're going to run the price up hard on news of P3, and it could be a massive pump and dump, and it could be something where, some institutional investors actually see the value and there's a plan in place to come into the stock and actually conduct the P3 and do a little bit of a longer term investment. But that's where I am. I want to see I want to see this P3 get started and I want a piece of those revenues. And I think the market ultimately it has to revert back to making sense. It has to revert to the mean. The actual value of these assets have to be reflected in the value of the company. And that's just the bottom line. Hedge funds can do a lot, they can control the price of the stock, but they can't change reality. And I invest with reality. I try to be sober about it. I try to look at who I'm listening to. And, frankly, just looking at the math that this guy does, John Vandermosten, um, you know, how does this make sense that the market cap is 7 million with no debt and they're sitting on assets worth hundreds and hundreds of millions of dollars? It doesn't make sense to me. That's why I've accumulated a lot of this stock. That's why I'm not selling it. And that's why I'm looking at for it to make a huge move upward on news. Guys, it's 10x Therapeutics. Ticker symbol is TENX. Today, the stock has traded about 300 million shares, or I'm sorry, 300,000 shares. Pardon me, and it's up just about a penny or 2.5%. It's been choppy. Volume all but disappeared. It's about 8:30 a.m. out here in Los Angeles, about 11:30 out in NYC. Just about 40 minutes ago, all the volume just went out of the stock, and it kind of did its flatline deal, and it's probably going to start barcoding or doing what it's going to do. It's going to do whatever the hedge fund wants it to do until there is some compelling reason for people to come in and buy the stock. Right now, I just don't think anybody knows about it. Nobody wants to know about it. Nobody wants to buy a penny stock that's been beaten down this low. It just doesn't look very compelling. So it's got to wait for news. You have to be patient with this one if you want to buy it, but I'm still holding. If they drive it back down for some reason, which I don't think they will, below 30, I'll buy more. But for now, I'm going to just hold my position and see what happens. You guys do you. This isn't advice. I don't know anything. If you have any brains at all, you wouldn't buy penny stocks. But that's 10x Therapeutics, ticker symbol TENX. The show is Un Poco Mas. We try to give you a little bit more for executive producer Hurricane Lopez and supervising producer Stock Karen. I thank you for watching. Have a great Tuesday, and we will talk at you real soon.